The question today is, how can an investor commit to a takeover deal with an expected return of 19%, and yet still have a higher probability of losing 23% of their capital? Well, we're looking at the proposed takeover of the luxury bag maker Mulberry. Frasers Group, a British sportswear retailer, is offering to buy the luxury handbag retailer for £1.50 per share, or approximately £100 million. Frasers made an initial bid of £1.30 per share on the 30th of September, which was quickly rebuffed. They have today increased their bid to £1.50 per share against a market price of £1.26. An investor committing to this deal today could expect a return of 19.05%. That is the difference between the market price and the offer price, which translates to an annualized return of 63.78%, which are very respectable returns. However, for reasons we'll cover in a moment, the risk-adjusted return on this deal is negative 70.03%, and should the deal fail to close, an investor committing today could expect a loss of 23.02% of their capital. So how can an investor expect a big profit and an even bigger loss from the same deal? Well, Mulberry has two controlling shareholders, Frasers Group, which owns approximately 37%, and Chalice, the private investment vehicle controlled by Singaporean billionaires Ong Beng Seng and his wife Christina Ong, and which owns 56%. Chalice has firmly rebuffed the takeover offer, noting that it is in an opportune time for Mulberry to be sold and that it has no interest in selling its Mulberry shares to Frasers. And frankly, they may be right. The shares in Mulberry traded as high as £11 per share in 2017, before sliding all the way to £1 before Frasers made its takeover approach, meaning the company has lost approximately 90% of its value in the last 7 years. The question an enterprising investor may now be asking is, will there be a price at which Chalice would be willing to sell, and importantly, would Frasers be willing to pay that price? Well, Mulberry was one of the icons of the high-end handbag world until a couple of missteps, compounded by the recent slowdown in the luxury goods sector, particularly among Chinese consumers, seriously dented the company's performance, resulting in a near £34 million loss in 2024. Mulberry was founded by Roger Saul in 1971 in Somerset, England. Saul, inspired by a combination of English rural life and the rising popularity of fashion accessories, initially focused on belts. The name Mulberry was inspired by the trees Roger Saul frequently passed in rural Somerset. The brand soon expanded into handbags, which became its most iconic product line. Throughout the 1980s, Mulberry gained a reputation for its craftsmanship and use of high-quality leather, appealing to those who valued timeless design. The 1990s marked a period of significant growth for Mulberry. As demand increased, the company diversified its product offerings to include more luxury items like briefcases, backpacks, and other leather goods. It maintained its commitment to British craftsmanship, and all production was cantered in Somerset. During this period, Mulberry solidified its position as one of the UK's leading luxury brands. However, the company faced challenges in adapting to changing market conditions and fashion trends. In the early 2000s, Mulberry's fortunes shifted with the appointment of creative director Nicholas Knightley, who introduced the Bayswater bag. This design became a bestseller and helped revitalize the brand's image. The success of the Bayswater coincided with a growing global demand for so-called it bags, and Mulberry's combination of quality and understated luxury made it highly desirable. After Knightley, Emma Hill took over as creative director in 2007. She continued Mulberry's resurgence by launching the Alexa bag, inspired by fashion icon Alexa Chung. This bag became another sensation and cemented Mulberry's status as a key player in the luxury fashion world. Mulberry was listed on the London Stock Exchange's alternative investment market in 1996, and in 2010, the company moved to the main market of the London Stock Exchange. This period was marked by rapid global expansion. The brand opened flagship stores in major cities such as New York, Paris, and Seoul, aiming to establish itself as a global luxury brand. However, the company also faced difficulties in balancing its British heritage with global expansion. By the mid-2010s, Mulberry experienced financial challenges due to its high price points, which alienated some of its core customers. Several strategic missteps, including rapid overseas expansion and price hikes, led to a decline in sales. Mulberry has continued to face challenges, particularly with the departure of Emma Hill in 2013, and struggles to maintain relevance in a highly competitive luxury market. More recently, the pandemic added further pressure, although the brand has continued to emphasize its commitment to British manufacturing and sustainability. In 2021, Mulberry celebrated its 50th anniversary, marking a significant milestone for the brand. It also pivoted towards more sustainable practices, using responsibly sourced leather and introducing initiatives to support the circular economy. For its part, Frasers Group, originally known as Sports Direct, was founded in 1982 by Mike Ashley in Maidenhead, England, as a discount retailer of sportswear and equipment. Due to its competitive price points, the company grew rapidly, expanding to more than 1,000 stores, which generate revenue in excess of £5 billion a year, making the company the UK's largest sports retailer with a market capitalisation of approximately £4 billion. In addition to rapid expansion across the UK, Sports Direct also expanded across continental Europe, with a significant presence in France, Germany, Spain, and Portugal. This growth was achieved both organically and through the acquisition of smaller rivals. Sports Direct went public on the London Stock Exchange in 2007, with an initial valuation of around £2 billion, with Ashley retaining a majority stake in the company, with him still controlling approximately 60% today. The public offering was part of an aggressive expansion strategy. Sports Direct acquired smaller struggling rival JGB Sports, in addition to sports brands including Lonsdale, Dunlop, Kangol, and Schlesinger. In 2019, Sports Direct rebranded the holding company as Frasers Group to reflect its move into more upscale markets, particularly luxury fashion. It was at this time Frasers acquired Flannels, a luxury fashion retailer, Gives and Hawkes, the iconic Savile Row tailor with a history dating back to 1771, and retailers House of Fraser, Misguided, and I Saw It First. It was also around this time Frasers first started to acquire its interest in Mulberry, which it eventually grew to a holding of 37%. The question is, will Mike Ashley succeed in his attempts to buy another iconic British brand, or has he bitten off more than he can chew this time? It is this huge uncertainty that simultaneously gives this deal a high expected return, alongside a negative risk-adjusted return. This certainly isn't a luxury investment for most. So, what does everyone think of this deal? Let me know in the comments below, and don't forget to like and follow if you found the video useful. Be aware that all the figures mentioned are at the date of my calculations and will change in line with the share price, any changes to the deal terms, and the duration to close. As always, this information is provided for educational purposes only. You should not consider anything in this video to be investment or financial advice, nor a recommendation or endorsement to buy or sell any financial instrument. You should always conduct your own research before considering any investment and seek independent financial advice. Thank you for joining me today, and until next time, have a great day.